Hey, what is up guys? It's Chris with Crypto Profit. In today's lesson, we're going to be learning about moving averages. So moving averages are actually pretty cool, and there's three different ways to use them. They help you to identify a trend, a momentum shift, and they also act as support and resistance. So when we're in a trend, that means that the market is either going in a downward direction or in an upward direction. If we're just kind of bouncing around an area and going horizontally, that means that the market is capitulating. So basically what it'll mean is that it hasn't really made up its mind, and it'll bounce around an area and go sideways until it decides whether it wants to go up or it wants to go down. And when it comes to moving averages, you want to use the 10-day and the 20-day moving average for short-term trades, and then you want to use your 50 and the 100 moving average for mid-term trades, and then the 100 to 200 to long-term trends. And the longer time periods help you to identify where the market overall is headed, and then the smaller time frames help you to identify when to get into a trade setup so that you can continue to ride the momentum. Anyways, let's go ahead and see how moving averages help you to identify a trend in the market. So the way that they help you identify a trend in the market is that if we're on a bull run, meaning that we're going up, we're going to have full body candle formations above both the moving averages. If we're on a bear market, or that means the market's going down, we're going to have full body candle formations below both of the moving averages. So let's look at some real life examples of both a bull and a bear market. Okay, so notice how we were going in a downward trend, and the way we identified is that we had full body candle formations below both of the moving averages. When we shifted up and now we were going in an uptrend, we had full body candle formations above both of the moving averages. So now let's go ahead and identify a shift in momentum or a shift in the overall trend, right? From going down to going up. And the way we do that is by this right here. When the two lines intersect and switch spots, we create something that's called a death cross or confluence, meaning that the two lines intersected and switched spots. Now, instead of us going down, we're going in an upward direction. So let's look at a real life example of confluence and a shift in the momentum, okay? So notice how we are going in a downward direction, and we have right here a 10-day moving average and a 20-day moving average. Notice how the 10-day moving average is below the 20-day moving average, right? Indicating that we're going in a downward trend. When the two lines intercross right here, now the 10-day moving average is above the 20-day moving average, indicating to us that now we're on an uptrend, right? And then once they crossed over again, the market continued to go down. So that's how we identify a shift in the momentum. Now, the last and final way that we use support and resistance lines is as both support and resistance. And the way they work is that if we're going on a downtrend, the moving averages act as resistance. If we're going in an uptrend, the moving averages act as support. So let's see what I mean. So we're going in a downward trend, right? We identified that by both. We had full body candle formations below both of the moving averages, right? And the 10-day moving average is below the 20-day moving average. Notice how even though we are going in a downward direction, we managed to break through the 10-day moving average right here. But then as soon as we touch the 20-day moving average, since we're in a downtrend, we got rejected, and it was acting as resistance, and then we continue to go down. And then the opposite is true when we're in an uptrend, right? We touch the 10-day moving average and we continue to go up, right? And the way we identified the shift in the trend again, the 10-day moving average switch spot where it used to be below, now it's above the 20-day moving average. So that's basically support and resistance lines in a nutshell. Pretty easy stuff, pretty cool stuff. You're going to use them quite often. And as always, remember to have a great day, and thank you for watching, and go get your money.